The stock market is at its worst half of a year since 1970, which means it's been a worse half of a year than the year 2008 or the dot-com bubble in the year 2000. So that had me thinking, what the hell happened in 1970 that was so bad, and are we in like a similar situation as the 70s? So I went back and started looking at the chart and did some research on the market and the whole economic ecosystem of the 1970s, and if it was similar to what we currently are in. So the craziest part about the 1970s that yes, it did have the worst start with a negative 21% starting off with the first 6 months, but after the first half, the second half, actually the stock market closed at an all-time high, gaining over 27% in just the last 6 months of that same year. So yes, the market did have a horrendous start, but actually finished up on the year, which is completely insane. So are we in a similar situation as in the 1970? And will the rest of the 6 months from July all the way down to December end up actually with the stock market gaining this year? But before we get into all that, remember to leave a like, subscribe below, and comment down below. This is going to be a long video, so you got to make sure you watch this whole thing. To prepare, I got myself a Coke Zero. So I know you guys love when I crack a cold Coke Zero or Diet Coke on the channel. I had to do it for this video. It's going to be a great video, so make sure you stay around for the whole video. We need to go back to 1970 for a minute to understand what was going on back then. Picture yourself that you're back in the 1970s where the average annual salary is $8,000 and average home is around $15,000. Well, doesn't that sound nice? If you save 2 years worth of salary, you can pretty much buy a home outright. The main reason why the stock market crashed in 1970 was because the first Earth Day was finally announced. The first Earth Day was created in 1970, and it is why the stock market crashed. People totally hated the Earth Day. They did not like the earth, they like pollution, so they crashed the whole stock market. No, of course not, that's what happened. What actually was happening was a mix of different things. We were kind of closing in at the end of the Vietnam War, and the whole US budget deficit was actually shrinking. So all the debt that the US had created to fund the war, they decided to kind of lower down on the debt and stop spending as much, which would mean, less supply for the war, as they were planning to kind of exit Vietnam at the time, which would mean all the companies are making all these supplies and making a lot of money doing so weren't going to get as much money because the US government decided to lower down on the debt that they had. Also, another huge thing, which is very similar to what is going on right now, is that inflation was actually rising in the 1970s. The 1970s was actually the highest year of inflation for that whole decade, from the 1960 all the way to the 1970. So because of the war, pretty much it created this inflation. The CPI, as you can see, had raised a lot, which is very similar to kind of what we're seeing now. Now, the inflation wasn't as high as we currently have to this date, but it was very high for that time period. Eventually, that inflation did cool off, but once again, to the later 70s and into the 80s, the inflation picked up actually much, much worse, and that was what caused the Volcker shock later in the 70s and 80s. Another key factor that was going on in the 1970s was that unemployment was rising. Compared to the years before, unemployment was rising, and we caused a very mild system of stagflation. Actually, between the year of 1969 to 1970, the US went through a very mild recession that lasted about 1 year and caused a negative 0.6 GDP growth. Now, the unemployment rates aren't actually high. Currently in 2022, our unemployment is around 3.5%, and back then it was around 6.5%. So our unemployment is actually much, much lower. Now, another thing that we have is a rising oil prices. Watch, in the 1970s, they did not have that just yet. They actually experienced it in 1973. Oil prices go up 400%, but in 1970, they were still very affordable. Another interesting part was that during the 1970s was a midterm year election, very similar to what we are in 2022. Which is a midterm year election. The similarities though don't stop there. In 1970, we saw a stock market bottom in May, where June created a higher low, and then July that pushed higher, and then the rest of the year just being a strong year, closing up on the overall year. Now currently we are in July, and we saw a May bottom, June currently creating a higher low, and now we're going to see how kind of July is playing. But on a technical standpoint, it is very similar to what is going on in the 1970s. Even though currently our unemployment rate is still very low at 3.5%, most tech companies are actually upping their layoffs on an increasing rate, and which could see our employment actually increase, which will push us more towards a recession. Very similar how we saw in the 1970s. Another really interesting and very similar thing that we saw in 1970 is that 1970 actually had a tech bubble. You're like, wait, 1970 they even had computers. Yes, they had computers, and all companies like IBM, which you might be familiar with, were actually around back then, and they were down over 60% of the overall year. And on average, any computer company was down on average 80%, which is totally insane. And that all happened from the beginning of 1970 to the end of the or middle to end of the 1970, which you could totally say that's another computer bubble or tech bubble, which we kind of experience currently. We saw an electric vehicle bubble, a crypto bubble that's exploding, and just all these tech giants and big tech companies down 50, 60, 70, even 80 and 90%. For example, we can see ticker symbol ARKK, which tracks a lot of these high growth tech companies down massively since the beginning of the year. There's definitely a lot of similarities on what was going on in 1970 to what is currently going on right now. Even talking about the war, there was a Vietnam War in 1970 still going on, even though the US was slowly making their way out of there. And right now, even though we're not currently in a war, there is the whole Ukraine and Russian conflict that is still currently going. Interest rates are also very similar in the 1970s. Due to the cause of rising inflation, they had to raise interest rates to about 6 to 7%. And then later on in the mid-70s, actually went all the way up to 11 to 12%. Now, currently, our interest rates are on average between the 6 to 8% mark, very similar to how we saw in the 1970. And the main reason is that because we saw increasing inflation in the 1970s, and we're currently seeing increasing inflation right now. And I do think that even though we will be able to calm down this inflation, just like what we saw in the 70s, as we were able to cool off the inflation for a few years, we might be getting more inflation throughout the next back end of the decade. The main reason it is because when the Feds finally see inflation cool off, they're quick to lower their interest rates because they want the economy to keep pushing and they want the stock market to do well, which then eventually, if it was a high inflation environment, causes inflation to come back later on. That's exactly what we saw in the 70s. We saw the 1970 tank, then as the interest rates came down because they thought they got rid of inflation, the stock market went up, but inflation just come back even stronger in the later 1973 to the mid 70s, which then caused a longer and more painful bear market and a higher level of inflation and higher level of interest rates. So you can't just kick the can down the road. And Jerome Powell is still very much focused on beating inflation, but I do have the fear that if we start seeing some of that inflation kind of come down, that he may be very quick to lower those interest rates to push stock market back up, because he's getting a lot of pressure from the midterm election and the government to have the stock market do much better, because of course people are just angry. People check their portfolios, people check their investments. You keep in mind that all these business people, they're losing as much money as you are. You even seen this in the crypto bubble. You know, you saw big companies like Celsius, BlockFi, Luna, all these companies actually blowing up and losing money. And these are companies that people believe to be some of the smartest people in the crypto space. These huge hedge fund managers, they're losing money just like me and you in this market, and they're not happy about it. Now, can we base our prediction on where the stock market is going to go? Because we have some similarities in 1970.
Absolutely not.
Because the landscape of the whole overall government and investing is just much, much different. There's so many different factors that were around in 1970 and that we weren't around here that did present in the 1970. Personally, I do think we're going to have a bullish second half of the year, and it's actually an opinion I've had even before this video of doing research around the 1970s. I think what we experienced this beginning of 6 months is kind of like a pre-game season. I think that we're going to have another push, and in 2023 and probably going to get a longer term bear market, which could last multiple years. I mean, the bear market from the 2000 to 2008 lasted pretty much all 8 years. You know, people don't want to say that, but from the beginning of the year 2000, we did not make a new all-time high until the 2008. And then right as we made a new all-time high, we came down crashing. Then it wasn't until 2013, 2014, 2015, we finally break those all-time high levels. And actually the S&P 500 and the NASDAQ made new all-time highs from all the way back to the year 2000, which means that, like, realistically, people that did not buy in the year 2000 didn't break even until 2013, which is just kind of insane. And of course, yes, you would have bought throughout the whole dip and would have averaged down your position.
Oh, of course, yes.
But still a really long time to not make a new all-time high. Because keep in mind that if more likely, if you're watching this video, you're probably used to the stock market making a new all-time high every other month, because it's been like that in the last 3 to 4 years. Well, if you don't keep this year in mind, but before this year, you're used to the stock market making a new all-time high all the time, when it just really is not the case most of the years. And of course, these are just mostly my speculations and my beliefs. You can have your own beliefs, and then please, if you do have, and if you do think the stock market is going to go a certain way, leave it down in the comments down below, because I do read all the comments, and I do think there's a lot of smart people out there that can share their opinion. Now, the best strategies out there are always going to be try not to fight the trend, and dollar cost averaging the high conviction plays. Through a bull market, through a bear market, you just have to adapt. You have to learn how and where you can make money. The recession is coming, whether you like it or not. You just need to adapt and find the best ways for you to be successful during different times. And just so you know, more than likely this is not gonna be the last or first recession you're gonna go through. What expands gotta contract. Just like that physics law goes, what goes up must come down, or something like that. I didn't finish college, so if I wasn't accurate with that one, don't get mad at me. Making videos like this, like going back to the 1970s, does take a long time to make, so I appreciate you guys for leaving a like, commenting down below, and subscribe to the channel, for showing you my appreciation for me doing this research and bringing it to you guys for a nice and easy, simple ways for you to understand it. As always, if you want to trade live with me every single day, the link will be down below. I day trade live every single day. And peace.